So welcome back everyone to another Finding Forex video. This video is just going to be a very quick one going over my Sunday routine. And at the time of recording this video, there is only like a few minutes till market open. But I'll still try and get this video up at least Monday morning or maybe even late Sunday. We'll see how it goes. So I'm just going to flick through all my currency pairs that I trade. As you can see, all the ones on the right are the ones I trade. GBP USD, GBP JPY, NZD, NZD USD, NJ, Euro USD, and gold. They're the only ones I trade. The DXY is there just for confluence on gold because, you know, it's a strength against it. It's like the US dollar currency index. So it's always good to know whether that's going up and down. And theoretically, if the DXY is going up, gold should be going down. But more on that later on. So I just want to say that I took a GU trade. It was a really, really nice trade, actually, that I took. And someone actually commented on one of my videos. I'll pop up on screen and I'll actually pop up the signal. They wanted to do the FTMO challenge. They was taking it. They were quite new. So I thought I'll help them out and send them a bit of a signal. And I sent them a GU SAL that played out completely perfectly. Actually, it missed my take profit by about a pip, which is quite unfortunate. But I'll take you over that trade right now anyway. So obviously at the time of taking this trade, we had these lows down here, as you can see, and we had these highs up here. Now I actually used a Fibonacci retracement from this wick here. Oh, we did it from this wick over here to these cluster of lows. Now this is something that you guys always should do when using Fibonacci. I've only just started using it in my trading, but it's a very good confluence to use Fibonacci zones with your actual support and resistance zones. So I drew my Fibonacci from that previous swing high to this previous swing low. I do the wicks. Some people do the candle bodies. It's entirely up to you, whatever works best. I did it from the wicks. And then I noticed that you had this nice area of support and resistance right in here, and then when price broke up above and then came to here, in my book we're still in a downtrend overall, so I'm still looking for sales. It was a 61.8 Fibonacci retracement zone. It was also resistance. On top of that, the candles were very, very small, indicating exhaustion. Now I could have put my stop above the 78.6 zone because it would have been a very safe place to put it. Instead, I did something like this. I think we got in after this hammer candle right there. Not bearish, I know, but still. We had stop losses just above it. And then we had a take profit of here. But my stop loss, or my take profit, sorry, just got missed. So we got a beautiful 2-to-1. We didn't quite get it. After this bullish doji here off this support zone, I decided to close. So if our take profit, sorry, was a little bit tighter, then potentially we would have been able to get this trade, but we didn't. We still got out with some nice profits. Overall, very happy with that trade. If we go on to the daily time frame, once again, still chopping downwards slowly. I mean, since when was that? August. It's now November. We've just been chopping further and further down. So at the moment, I'm still not looking for any buys. In fact, I'm looking to go short on GBP USD after this nice little rejection over here. So we've technically got a lower high there and another lower high there, and also a lower low here and a lower low here. So just looking at basic market structure alone, already going to be looking for sales. We've also got a bullish engulfing on the daily, which is almost engulfed 2 candles, which is just a very powerful indication that price wants to go lower. If we drop down to the 4-hour, we can see that it's had some issues getting past my 50 moving average, 50 period moving average. We drop down to the 1-hour, we can see that it actually hasn't broke above it at all. Now the 1-hour and using the moving average isn't as tidy. This still is a break, a retest, and then a push-up. And technically, we've created a lower high there. But obviously, just looking at the candlesticks here, we are still putting small candlesticks in, which could indicate some exhaustion. So potentially we might consolidate for a couple of days, maybe even a couple of weeks. We just don't know. We'll have to wait and see. Ideally, I'm looking for somewhere to break this zone, either to the downside, come up and retest, and then continue going downwards, or I'm looking to take it to the upside, to take it upwards. Either way, we shall see. How do I get rid of this brush? There we go. Get rid of this. I can't get rid of it. Either way, that's what I'm looking for. On to GBP JPY. Similar story. This would have once again been a good trade. I was actually going to take this, but because of the leverage on my account, on my under account that I'm using, I couldn't actually take this trade. I was using like a 1 to 10 leverage, which isn't actually that much. Normally, I would go for a much higher leverage, maybe 1 to 40, 1 to 50 leverage. Never go above 1 to 50, in my opinion, but that's just me. So I couldn't actually take this trade because I was full up on margin on that GU trade, because I did leverage quite a lot on that GU trade, which once again I probably shouldn't have done. But if we go on to the daily time frame, GJ is a pretty choppy pair at the moment. As you can see in this little bit of price action here, we've been chopping upwards and now we're chopping downwards. If you could maybe get a Fibonacci retracement and put it from these swing lows to those swing highs. Potentially, we've just rejected the 61.8 Fibonacci retracement, which is also happens to be a little zone that we can draw on right here on the daily time frame. Now, that's quite a big zone, and I don't personally like using zones that big. But that's a daily Fibonacci 61.8 retracement. So at the moment, this is looking really good for buys. We've got the break. We've got a little bit of downward structure, but we've got down to here. We've broken lower time frame structure. So if you drop down to the 4 hour, as you guys can see, we've broken out of these highs, and then we've broken there. So once again, it's looking quite choppy. We'll just have to see how this one plays out. But looking at the daily is definitely a lot more clean. We've got an overall uptrend, almost closed above the moving average. Didn't quite make it on the daily, but nevertheless, if we're looking at basic market structure, we've broken, we've trickled down, we've got a 61.8 Fibonacci rejection. It's quite a big rejection at that. We've also broken shorter time frame structure over here, creating a new swing high as opposed to this old low here. So potentially once again looking for some upside momentum on the Japanese yen versus the British pound. This trade here is the one I was also going to go short on. So I was going to go there, short position, because once again, exhaustion, trickling downwards. I didn't actually realize that this was a 61.8, so it would have worked out. Because I'd have set take profits to this zone. It didn't actually hit it, so it might not have worked out. So, you know, hindsight is all I'm saying, people. Hindsight. So yeah, overall for GBP, JPY, we'll have to wait and see. At the moment, it's quite hard on the daily. I'd probably be looking for buys, which is a strong indication what we should be doing in the short term. But at the moment, until I get some definitive short-term structure that we're going to be starting to move upwards, I won't be looking to take any trades any further. This is the analysis that I did for GBP New Zealand dollar before I got onto this video. As you can see, once again, an overall downtrend. Excuse me. Since again August, the pound has been getting very, very weak. We've had all this choppy price action here throughout October. We've now pushed down again. You could say we've broken structure, or you could say it's a retracement. We've got some beautiful rejection from the 50% Fibonacci retracement zone. On top of that, it's also a nice zone of resistance. So potentially, I would be looking to see a breakout of this area Ideally, I'd also like to break the trend line and the moving average, but you can't ever wait for the perfect setup. This is a short-term trend line. I just need to add. It's not my overall bias. My overall bias is still a sell, and I'll still be looking to sell the GBP NZD. But hindsight, I think we'll consolidate for a little bit, because at the moment, and pretty much every Asian session, we just consolidate. After that, we could look to break some structure. We could look to get up here. I would really like to retest the 50% Fibonacci retracement, so I could have something like this. So we could get a really nice entry here. We've also respected the trend line. We've respected our resistance here, and we've also respected the 50% retracement. I wouldn't be looking to target these lows. I would look to target all the way at least back down here for a 1 to 4, because we are once again very bearish on this pair. So I'm looking for it to break this consolidation. Hopefully we can get that. We'll just have to see. So once again, I'll take you back to the daily. Overall downtrend, as you can see, retraced to the 50% Fibonacci zone. Great rejection with the bullish engulfing, and showing great rejection on the 4 hour. I would like to break this shorter term trend line, but if we can show good rejection at the 50% and the trend line, we can see some exhaustion maybe, then I'll be looking to take this trade to the downside. NZD USD, not really a lot going on since around the 10th of November. We've pretty much just consolidated. I think this is the one with the double bottom. Yes, it is. So as you can see, we've broke into this zone, tested up here where the moving average is. Once again, small candles, exhaustion. So simple, yet so effective. I love exhaustion and trading exhaustion. You could have taken a nice short down to these previous zones. So you could have had something like that. Just above the moving average, nothing too bad, nothing too horrible. 1 to 2. If you wanted to be a bit more conservative, you could add your stop loss, maybe have a 1 to 1 or just about 1 to 2. Either way, you'd have been in and out of the market with some nice profits within, 4 hours, if that, 8 hours tops. So not too bad. Little double top here. We'll have to see how this reacts. If we do look for some more downside movement, I would want to see something like this. I'd like to see a break of this zone, a retest before continuing to the downside. We'll have to wait and see. NZD JPY, go on to the daily once again. Because I trade intraday, there's really, in my opinion, not any point whatsoever in going to the weekly or even the monthly, because I don't need to know that level of information. The most I'm going to be in a trade is a week tops. So maybe you want to go to the weekly. It's once again completely up to you. But we do have a sort of flag pattern coming on that I didn't know. So we've got this move up to there. And then we've also got the move coming down to here and to here. So we've got a nice little flag pattern there. So judging from that, I'll be looking for buys. This could be a slight retracement. Once again, if we bust the beautiful Fibonacci retracement tool out, we could go from these swing lows here or these swing lows. I would personally go from these swing lows. I think the ones before that are too much into the past. And the 50 period moving average is lined up nicely with the 50% retracement. So if we drop down to some lower time frame structure, we can see what's going on down here. Is there any sort of zones being drawn in? I have to say, just looking at this from the 4 hour standpoint, let me just remove the Fibonacci tool. It's quite choppy price action, if I'm honest. Once again, the little flag pattern that we've got going on, you could draw it from these highs, but in my opinion, that would look a lot better. Something like that, and then you could just clone and then drag that down there. So you've got sort of a descending channel on the 4 hour. So it might come to here. You could look for buys and do some scalping. At the moment, NZD, JPY, not something I'm really looking forward to get into. Euro USD, almost done now. Over here, we're looking on the daily time frame. Not much is going on, to be honest. Downtrend, so I'd only be looking for sales on Euro USD. We had this slight retracement here, but then we had a huge rejection from that. There's not really any structure on the daily time frame. We're not really creating any nice structure. We've got maybe a nice little trend line there going down, but apart from that, not really anything. If I was to look for sales, I would want a nice retracement, maybe back into this area here. And then we could be looking for sales to take to the downside. If we go on to the 4 hour, not really great. It's very choppy. Candles are very small. I mean, this would be an exhaustion trade if I've ever seen one. All the candles are very small. It looks like there's a bit of manipulation going on here, in my opinion. It looks like there's some maybe huge hedge fund or bank invested in Euro USD and selling it off. I know that the dollar has been very strong as of late, so that could be a reason. Since about, when are we looking? 28th of October. So if we're going to here, so there you go. Since about the 28th of October, we've been trickling downwards. So not only is Euro USD good for looking at the DXY, it's also good at looking at the DXY for gold as well. So, you know, multiple things and confluences you can take from that. Gold, chopping, not really looking very nice. I would personally draw that from here to here. It's my opinion. Now, some of you might disagree, but if it's consolidating, I like to box it off so I don't waste my time. So if I see there's a huge box around it, I switch to it. And the only time I'd be looking to enter when it's boxed off, if I can get something like this, maybe it can come in and retest or come down, or vice versa and come down. So we'll just have to see what happens with that one. Apart from that, not looking for anything on gold at the moment. But that has been my video analysis. That's my Sunday routine. I've just taken you through it once again. GBP USD, overall downtrend, probably looking for sales. GBP JPY, potentially looking for buys at this point. We'll just have to wait and see. If we go on to the daily time frame, it does look very good for sales. 61.8 Fibonacci rejection, broken shorter term structure, so we've created a new high and broken the old low, which is very important. So we will just have to wait and see. If we just tidy this up like that, so it's a very nice rejection indeed. GBP NZD, once again, I want to come up around this area again if we can. If not, I want to break this support zone here and retest the trend line, the shorter term trend line, and that resistance, and then take price back down to where my take profit is currently on your screen. NZD USD, choppy, double bottom, not too sure at the moment. NZD JPY, a little flag pattern, so once we can break out this descending channel, looking for buys. When or where that will happen is anyone's guess. Euro USD, chopping downwards still. If we use that in confluence with the DXY is still going up, and we don't know when the DXY could be going back down. We will have to wait until FOMC, because that will determine the interest rate, which will determine where the US dollar is going in terms of higher or lower. Gold, although the DXY is going down, gold is just sort of consolidating. A lot of people do. The reason why gold's not as effective with the DXY is just simply for the fact that investors do like to use gold as long-term wealth, so they'll invest and they will just hold it. That's why when you look at the Bank of England, they've got loads of gold in their vaults because it holds its value really well, and over time it gains even more value. So which is why it's a really good thing for investors, which is why I think you saw at the start of the pandemic a huge dip in gold, but that was because everyone was buying the US dollar, and then gold once again recovered beautifully because it's just such a long-term investment option that can pay very well. But that has been the video. Let me know what you guys think down in the description below or down in the comment section below. If you did enjoy this video and you want to help me out and you want to help the channel out, please give it a thumbs up. But thank you all so much for watching. This is Luke, and I'm signing out. Peace.